Liz joins us here with more. She is Semaphor's business and finance editor. Liz, good morning.
Good morning.
So you're tracking, I guess, I mean, it's always attrition, maybe after a deal, but in particular, who's leaving and what does it say about JPMorgan in this business?
Yeah, I should say some of the attrition was, in the weeks leading up to the deal, which is an incredibly fraught time for First Republic. But no, these are big relationship manager teams. So, whether the clients go with them, it's not a guarantee. It's a couple of big teams in New York went to Flagstar, which is the acquirer of Signature, another beneficiary of that tumult this spring. A bunch of others to Citizens. So, look, this is a business that JPMorgan has wanted to be bigger in for a long time. They punched way below their weight there for a bunch of reasons. And look, in picking up First Republic, it's a chance for them to really move the needle.
And to be specific about what this business is, wealth advisory for a certain category of customer?
Mass affluent. I mean, they have a pretty good private bank, super high net worth, but this is like the medium rich people, so $1 million to $5 million net worth. This is a business that they have, the branch network of Bank of America, and sort of the brand name of Morgan Stanley, but those two firms have $3.5 trillion of assets. JPMorgan has about $600 billion in this business.
In that category. I mean, I guess they might say, Morgan Stanley was built on Dean Witter and Smith Barney and these retail brokerages that have been around forever, obviously BofA is Merrill Lynch. What are JPMorgan's ambitions, do you think, in this area? Is it a huge priority, or are they just sort of willing to kind of take people from, if you built up X amount in your checking account at Chase, we want to just fold you into some other advisory service? No,
they have real ambitions here. And to your point, the other businesses, it's really hard to build this business organically, right? Yeah. You can pick off a team here and there, but the powerhouses in this business were all built through acquisitions. And the truth is, there isn't that much left to buy, right? They got First Republic. Raymond James is still out there.
You mentioned in your piece that JPMorgan looked at acquiring Raymond James.
Very seriously. And I don't know exactly what happened. I had some conflicting reporting around it. But that's left, Edward Jones is smaller, privately held, harder to get at. You've got some of these roll-ups, like the thing that Goldman bought a couple of years ago. Sure. United Capital, a couple of those out there. Hightower, LPL.
Yep.
Maybe the UBS, the old Payne Weber business. Morgan Stanley's taken a couple of runs at them over the years.
Yeah.
There's not a lot left, so they're really going to have to squeeze whatever they can out of First Republic.
Probably worth mentioning Jamie Dimon, dates his career back to Smith Barney, essentially. That's where he came out of.
Yeah, has that DNA. But look, JPMorgan is somewhere between very good and unrivaled in almost everything they do. And this is actually a little bit of a weak spot. And, they reorganized this business in 2019 under Kristen Lemkow, this U.S. wealth management business, given it a lot of resources. I think at the time, it had like 3,500 advisors and maybe $500 billion of assets. Today, it's got 5,000 advisors and $600 billion. So, they're moving the needle a little bit, but First Republic is the way to really to level up.
It seemed as if the immediate verdict on that deal was that JPMorgan, actually got good economics out of it. It seemed like a decent opportunity. Obviously, it was a company in distress. Does that change with how it plays from here in terms of retaining people?
Look, M&A is always tricky, especially in a business like this, which is really a people business, right? You have the financial advisors and then the clients underneath who, frankly, went through the barrel this spring, had a couple of really white-knuckled weeks, wondering if their money was safe, if their advisor was going to be around. Look, JPMorgan has this incredible brand and really was a huge beneficiary, both financially and I think sort of from a brand perspective from the crisis this spring. See if they can capitalize on that.